Hello everyone, thank you so much for joining me today. Another different background, traveling again. This time we're in California for the Tesla takeover, but I definitely want to take some time to review Ford's earnings with you. If you don't know, Ford is one of the very few, really the only legacy automaker that has broken out its EV business away so that we can look at how profitable they are from that side of the business versus the rest of their business. I do want to highlight at a high level how Ford has performed for the second quarter of 2023 and then deep dive the EV earnings a little bit more, which might explain some of the movement in the after hours after Ford reported its earnings. It's down about 1% as of the time of this recording, even though it showed strong performance for the rest of the business. So real quick, Ford Blue, which is what we know of as the F-150 Mustang's subdivision of the company, just the regular consumer cars, positive $2.3 billion in EBIT, earnings before interest and taxes, 9.2% EBIT margin. Ford Pro, $2.4 billion at 15.3% margin, which is actually a pretty good margin. But again, Ford Model E, which is the EV division, is at negative $1.1 billion at negative 59% margin. Now, if we compare the quarter over quarter results for Ford Model E, which is again the EV division, what I really want to highlight here is a few things on this chart as I have it up here. So number one, you can see in the second quarter, Ford sold more EVs than it did in the previous quarter and the previous year second quarter as well. 34,000 total wholesale units in EV. This is actually a record for the company, I believe. They've never sold this many EVs, so props to Ford, that's awesome. And they've also achieved record revenues at $1.8 billion for the quarter. Now, the two numbers I really want to highlight that we should be looking at here when it comes to Ford's profitability for electric vehicles is their margin and how that's impacting their EBIT. Basically, how much money the company is bringing in for that division after they account for all the expenses that are associated to that part of the business. It's the EBIT margin again was negative 59%, and it's much better than the previous Q1 quarter at 102 negative percent, but it's still significantly lower than the previous quarters from years past, for the last year and a half rather. So you can see for the first, for the entirety of 2022, the margin was around 40% negative. But starting this year, the first and second quarters, they took a huge dip. The first quarter was because of the lowered wholesale units in the first quarter. They shut down some of the lines for Mustang Mach-E production so that they can ramp it up for the rest of the year. But in the second quarter, even though they had record deliveries and record revenue, they had lower margins versus the previous quarters. And you can see this impacting the EBIT line, basically the bottom line for that business. They went from negative $700 million lost in the first quarter to negative $1.1 billion. Now, of course, these numbers are not good when you think about a business existing, but it's important to highlight that Ford is currently in a ramp-up phase for their EV business. However, even though they're ramping up and they're trying to, make their cars as profitable as possible by selling more of them, it's important to highlight that even though they sold more units, they've lost more money. So their acceleration of the business is making them lose more money from that EV business. The only way they can really turn this around is they have to reach a certain level of units, probably in the hundreds of thousands from the looks of it, for them to be able to turn that number from negative to positive. But in the current ramp phase that Ford is in, the more cars they're selling, the more they're losing until they hit that sort of threshold to get over the hump. They'll do this by maximizing the lines, making their supply chain way more efficient, minimizing the number of people are working per car. And that's probably one of the biggest leading factors as to why they're not performing as well as they should on the EV side, and just experience from that part of the business. Now, there's a little bit of language in the earnings report that I really want to highlight that's very interesting, not just for Ford, but the broader EV market, specifically around some of the commentary that Elon Musk has said around Tesla. Here's a quote from that Model E page that I just reviewed. Industry-wide pricing pressure and investments in capacity and new products adversely impacted profitability. But the first line there, industry-wide pricing pressure, is something that folks like Elon Musk and other leaders of car companies and really the broader market as interest rates have gone up, they've highlighted this as something that's going to impact a car maker's ability to create and make more profit. And I think the fact that there's another automaker coming out and saying, hey, there's broader pricing pressures out there because of the higher interest rates, most likely is why they put this in the report, I think sort of backs up some of the commentary coming out of Tesla where they say, hey, the reason why our margins are going down is because people just can't afford to buy our cars. So we have to lower the price so that more people can buy them. And so really we're entering a phase, I believe, in the EV segment where having an affordable car is becoming more and more necessary, especially to survive this higher interest rate environment. But really the key thing here is being able to create not just a car that's affordable, that's an electric vehicle, but one that's profitable. And the more Ford has to lower pricing on their models to get them out of the lots into customers' hands, the more drastic this is going to be on their profitability, unless again they can ship hundreds of thousands of units per year. Now, as far as where Ford wants to be from a production perspective for their EV segment, in one of the pages on the earnings report, they want to reach 600,000 EV production run rate by the end of 2024 is how I'm reading this message. Basically what it means is by the fourth quarter of 2024, which is in about 6 quarters, they want to improve their production rate from 34,000 units to 600,000 units. And so what that means is that Ford has to 18x their production capability in the coming 6 quarters to be able to reach that target. And the reason probably why they have the target is because that's the number in their head that they're saying, hey, this is where we're going to be profitable. In previous quarters, Ford guided to 8% EBIT margin for the business. And by reaching this number, they should be able to reach that profitability. However, again, as the market lowers the price and there's more pricing pressures, that becomes harder and harder to do. That target that they set, that 8% margin, was before all the crazy pricing pressures that started existing this year, especially around the price decreases that Tesla put forth for the vehicle lineup. And how this is impacting Ford is going to be very interesting to track. I will give a lot of credit to Ford, though. Again, this is the only legacy automaker that is really brave enough to break out their financials for all of us to see and how they're performing in that part of the business. So huge props to Jim Farley and the broader team, but obviously I think the team would agree here that there's a lot of work to be done, and it's super important for the EV business to reach critical mass to be able to ship as many EVs as possible. Lastly, one of the key things I want to highlight on here is that on its 2023 guidance from Ford, one of the pages that they had, one of the things that they highlighted was global economic uncertainty and inflationary pressure, and again, higher industry-wide customer incentives and continued EV pricing pressures is something that they highlighted as a tailwind, as something that's going to be negative, or excuse me, as a headwind, as something that's going to be negative. Headwind is hitting you in the face, it's making you harder to move forward. That's why it's called headwind. And that's what they highlighted for the business. And again, it's fascinating to see that Ford has this verbiage in multiple places on their earnings report, which I think highlights just how much the company's thinking about the pricing pressure and how that's going to impact their ability to be profitable. So I would love to hear what you think about these earnings. We're in a very interesting point in the car industry as it's transitioning into electric vehicles. And the big question is becoming, I feel like I keep running into sun. And the big question is becoming, will more and more customers take on electric vehicles? Or is it going to be a limited segment of the entire auto industry? I am of the thought process that electric vehicles bring too many advantages for customers to not adopt them long-term in mass, especially as they become much more affordable. And then if you layer on top of that, a lot of the software that electric vehicles can take advantage of, not just from a self-driving perspective, but just being able to run as an entertainment machine without having an engine to run in a garage where the carbon monoxide is going to kill you. There's just a lot of benefits to having an EV. So if there is more and more transitions into the electric vehicle market, then Ford is going to find it harder and harder, I believe, to keep their Ford Blue and their Ford Pro business as profitable as they are now. And that's what I'm keeping a very close eye on into the coming quarters and years as we transition more and more into electric vehicles. So let me know what you think in the comment section below. I have a lot of fun reviewing these things. It's just a very good way of keeping an eye on how the car market is performing. And if you found it helpful and informative, I love it if you throw me a like. And if you want to support the channel, I have links in the description to merch and Athletic Greens, which is a supplement I use every single day. free vitamin D and travel packs with your purchase. Thank you so much. I hope this was informative and helpful, and we'll see you in the next one with probably a different background because we're moving around this week. So take it easy, everybody. Bye-bye.